Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar still at this stage remains to a potential downturn, but the support holding around 77.10, a significant break from that should see a further slide towards 76.65. With the two supports the main key to the downside, a break at 76.65 would then lead on down towards 75 cents. With a bearish MACD and also a decline in RSI, and also the trend line does pose a threat and could unleash the bears if we see a break of the first, as I mentioned, at 77.10 and then towards 76.65 and see if that level can hold. As long as we don't close above the level of 77.85.95, then the bears should continue the downward trek. The US dollar, which measures the greenback strength against a basket of 6 major currencies and weighted to the euro at 57.6, is still holding to an inverse head and shoulders. Now currently trading around 90.20, although a little far away from its challenge, or to the neckline, that is, to the inverse head and shoulders at 90.80. The technical implications still hold for a potential challenge, therefore should see the euro pressure back to the downside. With little to the upside, it's at the focus of the FOMC rate decision tomorrow morning at 6 a.m. It is expected they may keep a slight dovish tone. However, with the pattern for the euro still holding negative, I am holding a view that a possible downturn should come back to 120 as a target. Let's see if that emerges. It's still very tight with the dollar yen, with the 103.40.45 and the 104.05.25 parameters locking this range for some time now. But looking at the technicals, we can still may see a break. Now, this line that emanates from mid last year is likely to be accumulating a lot of stop losses. So if we see a break above 104.25, that could generate a rise up towards 105 or possibly to 106, with safe haven demand somewhat lacking due to the recent Biden coming into the presidency, and also the fact is that things are a little bit calmer, may see a little bit more yen weakness and dollar strength. Let's see if we can see a break of 104.25. The bulls are determined to take out this level, which is around 137.45.65. Now, at the moment, it is possible we could see this break. However, still keep in mind that there was some talk not so long ago about lowering interest rates to negative from the Bank of England. That would see a significant downturn. However, the market's still quite determined, as I mentioned, and let's see if we can see a break at 137.45.65. I believe we will see a rejection, as the MACD is very flat. Sterling yen not quite clearing this level of 142.45.65, but nevertheless, it is still a little bit higher. I believe the market may edge up a little bit further towards 143.5 and then maybe see a rejection. The gold pattern for the last 5 trading days still remains negative after failing to take out the level of 1,878. I still am viewing that the market may take the challenge back to 1,820. A break beneath here would give scope towards 1,765. With the technical implications still negative, it still poses a threat. And finishing up with oil, well, the market's still somewhat a little bit subdued since the backing from $54 a barrel, and still in no man's land, as I would call it, as in the direction is lifeless and likely to see that into the next coming session. But the MACD is negative, and I feel the market will eventually sway back towards 49.40.50. Only a break there would give further indication to the downside. But the present is a lackluster price action. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report and hope you enjoy the rest of the day.